On into today's stream, we are setting the stage before a anticipated CPI. I can't say that it's the most anticipated CPI of the past couple months, because it definitely is not, but it's definitely an anticipated CPI nonetheless, because we're waiting for some better direction. It just seems like it's been a little choppy. It's been a little like, I don't know what's going on exactly. So we're going to kind of talk about what's going on and unpack a little bit of that for us here, and then hopefully get a better feel going into that CPI. So I'm looking at Tesla right now. Just see how this thing handles. Doesn't look too great. It looked like it had a false breakout here this morning off that opening pop, and then it's been kind of selling off since. If I zoom this bad boy out and take a peek, let me just adjust something really quick on the side, make sure everything is working well. Let's see. Hopefully the stream is working good. I got a little error notification. It's gone now, but hopefully everything is working as it's supposed to be. Let's see. So yeah, I ended up grabbing. I'm gonna get rid of this for a second because it might be taking up a little too much juice from us here. But we had this level right here on Tesla that past couple weeks, I guess going back to late last year, a couple weeks ago or 2 weeks ago, not even. It rejected a couple times up around this 123 to 124 area. And so that was kind of a spot to watch. Also rejected there on Monday. We broke above that, but quickly fell right back below this blue line, which is like a general area. Of course, just one line is not perfect, but it's like the general area that I've been following. And it broke back below the blue line, so it didn't look like it's going to hold, or it doesn't look like it wants to hold this breakout. Obviously, we'll have CPI, and then that will give us a better sense of direction. Market seems strong. Maybe there's positive news flow for Tesla at some point, and that can get us above. But until then, that's kind of our line in the sand, around 123 to 124, give or take 125. Today looks like a false break for now, but we'll see if that ends up holding up going forward. What do you got around the core, on the close up? I'm getting a TQs. Yeah, I actually grabbed one myself. Here it is. Here it is. It's in the Robinhood account. I got this 20 and 18 on TQ's Strangle for 78 cents is what I paid. It's going for around that 77, 78 right now. I got 5, so I put essentially like $400 on the line on the Robinhood account, which I'm not really trying to do anything stupid there. Just, it's a smaller, nothing crazy is what it is. But I've been liking the way I've been playing this. Now, of course, I ran one like last week. It ended up going 25% overall. So one of the contracts went like 150%, whatever, something like that. So the overall Strangle went like 125 or 25% from my cost basis. I think I paid 500. I ended up selling it worth 650. I sold both legs individually. I didn't do it through like, a strategy builder like a Robin or whatever. I just did it separately on a cash account, because you can't do certain option strategies on a cash account. So that kind of worked. I entered it. I got back into one. Instead of TQs, I ended up getting QQQ. You can go with a bunch more contracts, I guess, on the TQs, but I decided to go QQQ, and I played I'll jump over to show you the strikes, or at least what I'm looking at. When I entered it, we were like around this like 1 or this like 275. Like we were like somewhere in here when I entered it. And so I bought a 281. I'll go to the daily chart. I bought a 281 call, which is like right up here. And I bought a 269 put on QQQ expiring next Friday. So not this Friday, next Friday. So I get an extra week of time on it. And ideally, it's something that I'm looking to exit this week, in a perfect world. Obviously, if we get a huge move or whatever, we'll have to see and how CPI reacts. But we're kind of in the middle. We inched a little bit higher since I bought it, but not much. So it's essentially break even for right now. But if we get a push up into this area or down into this area tomorrow, which is very possible based off the numbers or based off CPI, this should be green, and then depending upon, if we get continuation and whatnot, we'll hopefully have a better feel for it. But that's my plan on it. And I figured to lock that other one in because I had nice gains, and then we can come play a different one. And sometimes you're dealing with time decay, you're dealing with a bunch of different factors. So I want to see how it plays out. And, I'll look back and I'll review all this stuff, once we hit the expirations, or once we have, the big move or whatever, we get to the deadline, the expiration dates, and I'll be able to see like, okay, like, what should I have done here? If I had held longer, would it have made more sense? Would it have made me, exposed to more risk that I wanted to? Like, what are the downsides? Not something that I think is a huge thing to do every single day, but on select occasions, I think it's very, very useful. Not to mention the VIX, trying to break down this little wedge right here, but VIX is low. So, if we had a CPI and the VIX spiked up off the CPI, that's going to help contracts, for sure. If we have a situation where the VIX is up here and we have and you're trying to do a strangle or something like that, or a straddle, and you're sitting up here and you're like, and all of a sudden we get up, a VIX just flush out, but kind of a slow grind up or a consolidation or nothing happens, that's a recipe for disaster on playing those. So you got to be careful, but the VIX being nice and low, I think is helpful. So at least it lowers the volatility factor in some of these options, at least for right now. But to be honest, I am kind of surprised. I am kind of surprised at today's action on SPY. Here's SPY's chart. We're going up and potentially going to test 395 into the close. That's pretty impressive if you ask me on SPY. I wouldn't have expected that, but then again, right? In this environment going into CPI, you got two camps. If CPI comes in positive or comes in, cooler than expected, everyone will say, oh, the market was pricing in the CPI, or somebody leaked the CPI ahead of time. If it comes in the other way, it was a trap, right? So it's like everyone's going to have their reasoning. But I don't think too much. I'm not going to put too much into it. It's more so we got a kind of a lucky trend day. I mean, I wasn't expecting a trend day the day before CPI, but we kind of got a lucky trend day. So that's the deal. 873 in Tesla day trade. Nice. Very nice. I have been in, I'm going to probably do a separate video, but I have been in one of the weirdest, say ruts, but because I haven't really been doing it for that long. But in terms of my win rates, they're horrible right now. This year, December, I had like a 63% win rate, I believe. Right now, I'm tracking at like a 25. Horrible. It's just like, holy shit. But I look back at the trades, I review them, at the end of the day, I'm like, to be honest, they're very valid. They're not I look back, a little chasing, could be a little more patient. Yeah, but you're always going to have that. That's always a part of it. You're never perfect, I look back, I'm like, to be honest, man, it's not like I'm taking retarded, trades. I'm taking, what seems to be smart trades, in my opinion, right? But whatever, that's the deal. So I can't really get too mad at myself. GRNQs earned a curl past few days, no volume or news. Let's see. Yeah, it is. It is. But we're kind of seeing that, though. That's just kind of like almost the January effect in some of these small caps that are down towards lows. It doesn't have a crazy volume, but it's not taking too much. And you're kind of seeing that across the board. A lot of small caps that are right now you're seeing, what we've kind of been seeing in the past couple weeks is money flow coming into these small caps. This is the time of year that generally see money flow, and not to mention that a lot of them are beaten down so much that there seems to be, in terms of some better value, people are seeing that there's potentially better value here than in some of the other inflated large caps and mid caps out there. Not to mention, you look around and you say IWM has been pretty strong. You look over at the risk-on stocks like the Affirms, the Coinbases, and the Upstarts, the Shopifys, Palantir, Roblox. All of these stocks not came out of nowhere, but all of these stocks are kind of pushing up now. And so you're seeing some money flow into some of these names that have been beaten down. So I don't know if I want to put too much else into it. I don't think that there needs to be. Expecting CPI to fall off hard, doesn't risk his downside. Yeah, I think that there's definitely a downside risk if CPI comes in hot. I don't know. We'll see what it comes in at. We're expecting on CPI, here's the numbers. We are expecting a 6.5%. That's the consensus view. So, yeah, a high bar to beat. I think it is potentially high, to beat, but 6.5. We come in at 6.4 or less, we should rally. You'd think we should rally. We tanked after last CPI, although it was positive, chop. Yeah, we also had a Fed meeting, though, right after that as well, which the Fed did talk kind of hawkishly. And they kind of dug their feet into the ground further with the higher for longer rate side of things. And so I think that played a factor into it. I don't know, how much, but I think that played a factor into last CPI. So this time we don't have a Fed meeting until like 3 weeks from now. So we got time. And not to mention the next Fed meeting is going to be around when a lot of companies are dropping earnings reports. So it should be really interesting. Here's the last CPI. He popped to 410 on SPY and then sold off the entirety of that day. The next day sold off even more, and the day after that was the Fed. No, the Fed was Wednesday, I believe. And then Thursday, the 15th, we sold off even more. And so just kind of continuation to the downside there and broke down below. Now we're trying to get back above. We're really not that far off. We're like $6 away on SPY or $7 away on SPY from that trend line test. So we could very well, and CPIs have caused some big moves. $10 range is not out the question. It's very much likely that we'll see, a $5+ range on SPY tomorrow, whether that's from pre-market through the day, right, or more. I think we popped to like 413, 414 in pre-market on that December 13th CPI day. So that's where we're kind of sitting at going in this CPI. I think it's going to be a fun one tomorrow. I'll do a live stream for that too. I have to leave probably after, but we'll do a nice like half hour to an hour live stream going into CPI at a minimum. Can COSM recover? These are the pump and dump plays. I feel like, right? COSM got pumped. It's in just, I don't know what the heck's going on with it now. I remember this thing had a crazy run to finish off last year, November, December. It does not look very good. If you ask me, this is like holding this support here at 425. But if that area drops, like this could easily break down for more. And after this thing got pumped to the degree it got pumped, it feel like this thing has more downside to just bleed out because people are on the wrong side. If you ask me, I haven't followed it super close, so I'm not gonna, I don't want to sway really anything, but whole spin-off being stopped really messes. The metamaterials play, I remember hearing about that stuff. I also was not following that very, very close, but it seems like that really kind of messed with a lot of people. People were pissed about this whole debacle almost from this thing, this whole spin-off mess that happened like a month ago. Watching like button needs some love. Like button, the thing with the like button, is that it can get a lot of love, and again, no one needs to know. No one needs to know that you're hitting it however hard you want to hit it. You can smash it if you want, but that's up to you. Only one trade today, SPY puts. Oh, dude, I had one too with I had one that I stopped myself out. Looking back, I probably could have had a better play on it, but I had it right here. I had it off of this lower high on the 5-minute chart. I saw a double top right here, lower high on this candle, and I entered. I got a decent entry, and then we ended up coming up, and I had a stop loss on a 5-minute close above 393. We just barely closed a 5-minute candle above that level. Looking back, I could have, realistically had the stop loss over the high of the day. In a perfect world, I would have been a better execution, but I didn't. And we just got shy of high of the day and then had the dump. Would have been great had I, played it, but I did not. Meanwhile, we're hitting the high of the day right now on SPY, so she's just like ripping it. That was a mistake. I also had, I don't want to say mistake, but that was just kind of a execution. The idea was there. I had the idea. The execution was just not perfect. And it cost me. You're not going to win them all, right? But sometimes those hurt a little more when you get the move that you were looking for. I was looking for a bit more. I was looking for a gap fill move, to be honest, on like the higher end, but I would have been able to get something. I wouldn't have taken this off red. It wouldn't have been a red trade had I got that move sub 392. I would have been taking something off. That is for sure. Also, I had mRNA as well. This one burned me so hard. I entered this somewhere up in here, looking at a breakdown weakness this morning, and then a reject of this 188, which is a prior level that I had charted out for a long time. When I saw this wick off this 188, I was like, okay, we retested it and rejected. I ended up looking back. I probably should not have stopped myself out here, but I ended up stopping myself out for a small loss right here, only to then walk away and then not catch the actual move that I was looking for. It would have been a monster play. I had it on the small account as well, and took a little bit of a burner right there. But Those are two that pissed me off because I had the ideas, just the executions were off. Really could have, I guess, you could have waited in hindsight for that retest, but there was no guarantees that you're going to get that retest again of that 188. So, that's on me. But yeah, the small account, man, I won't say I sized up, but I started sizing up a little bit on it. And like I said, I'm on a 25% win rate the past 2 weeks, which has been horrible. So it's just been we're kind of catching this I look back, they're not bad. They're really not terrible trades. They just don't work, and it is what it is. And I've kept the losses to a minimum, right? So in terms of the size, the losses are not, it's not like we're having one trade that's burning the entire thing and we're blowing it up. No, we're actually keeping them pretty nice and keeping the risk reward really nice in line. And it makes a lot of sense when I take a step back and look at it, but it just not working. At least now, hopefully after CPI, get a better sense of direction and get a better feel for stuff, but I'm getting burnt. Been getting burnt, I'll tell you that. TCDA for a swing. Well, not right now. I mean, I wait for CPI, but let's see. Definitely gotta wait for CPI. That doesn't look too shabby in terms of the potential upside. My goodness. We want to check on their cash position. We want to check on latest earnings, that last earnings. Obviously, what was the reasoning why this gap, this massive dump? If you can back your way into it and it makes sense to you and you're like, okay, this is a valid trade, then it very well could be a decent opportunity. We want to see it holding around this 15 cent level. Wouldn't want to see it drop much below that, ideally in a perfect world. That's where I shorted as well. Good. This morning, it was weird, but yeah, I guess I'm not super surprised, to be honest, with the action this morning because, it's a wonky kind of day sometimes when you get these CPIs. Everyone's kind of weird, waiting for CPI. What do we, the price action might not be super consistent. Sometimes it is. I had a good upstart trade today, but a couple of little losses, man. The win rate today was, honestly, it might be around 25% as well. Super careful sizing up. Yeah, I mean, the thing is, the thing with the sizing up, it seems like every time I've done it on the small account, we go through that next period, the next couple of trades where it's just loss, a couple losses in a row. Obviously, had you hit them with the small account from $500, because I think it was at $500 finished last week, right? Roughly a 550, 520, something like that. Had those next three trades been green trades, right? Because of course you don't know. You have no idea which ones are going to be green, which ones are going to be red. But had the next three been green off of that, as you start to inch the size up, now you can go from 500 to 700, 800 like that. You know what I mean? And go, oh shit. But when you size up and the next three trades or next four trades even sometimes, because you could get 4 in a row, 5 in a row sometimes that are red. Next couple are red, you go from all of a sudden being at 500 back to 3 something, and you can be down that, not terrible. It's not like you had one trade that took you from 5 to 3 or 5 to 4 or 5 to 350, whatever the number is. I forget what the number is on the small account right now, but I'll update it on Saturday like usual. But it sucks when that happens, but it's part of the game. You can't really, I would in the past get super upset about it. Not super upset, but I would get pretty discouraged by it. But I'm looking back and reviewing stuff. I'm really not. There's no reason to be discouraged. There's not much of a difference that I'm doing from what I had in December, which I had a 63% win rate and a really solid month across the board, to now. It's just, I think that I haven't adapted fully to the market. And I think we've been in this limbo zone since the holiday time that was very choppy and range bound. And then now we're still waiting on a CPI. And so we kind of came out of the holidays and it's a CPI is coming up in a couple of days. So you may as well just kind of wait it out. And so price action's been a little wonky. I think people are a little timid to start tossing money and putting money to work, or there hasn't been enough reasons necessarily to sell and to dump stuff lower. So we're kind of in this limbo. That's how I kind of perceive it right now. But it is what it is. To be honest, the strangles have been the highlights. Maybe that's telling me something. It's a bigger, when the time comes, when we see the setups for the strangle ideas, we hit them hard and we make sure that we are ready to go for those and we size in accordingly. manage the risk and let it go. Got a little discouraged, to be honest, but used to get into a terrible mindset where I would get sucked. Yeah, I would do the same thing, 100% as well, and I would start sizing in heavier to make it back and say, oh, this one, if I just get half it back right now, okay, it won't be as bad. Nah, it's just sometimes they work, and sometimes you'll make half it back, or you'll make it back and you'll get it back, but you'll do it through like the worst possible habits, and then you'll just set yourself up for failure, in a week or in a month or tomorrow. That's what you're doing. That was the old me. Would never think about doing that again. I think we all think about it, but having the restraint, right, is what I think is been the best part, or the part that you can kind of learn from and move on from. Because you start to think about like these stupid little things. If you don't have those blow ups again, and you're still standing now, picture where you could be in a year, right? After a year of minimizing those blow ups. So, all right, well, we're looking at Tesla. Not that it really matters, but what we look at right now. But SPY is pushing pretty nicely into the close. So Tesla's at this 122. It's still below VWAP. Look at SPY. This SPY trend, man, from yesterday open to today, which essentially Powell's speech that we had yesterday morning was a nothing burger, like at all. It's just been in this nice, just range to the upside. We're touching 395, or we're getting very close to 395 on SPY. So I would be cautious here. I would definitely not be looking to go freaking long right now. Absolutely not. But we could be in this like little squeeze out mode where we kind of just squeeze higher into the close. And if we do, we can obviously break 395 and go for a bit more. Does it really matter in my view? Like not really, because of what we have tomorrow, but still, check this out. Look at this, Affirm. Look at some of these stocks that we've been looking at. Affirm off the lows. Really nice move today over 1020. Big move of $1, which is a 12% move in the stock. That's killer. Upstart from 1420 or something like that closed yesterday to 15, hit 1580 today, 1583. We hit on Upstart. Let me adjust this so you can see it's at 1519 now. I had a piece of that. I had it this morning. That was one of the trades. Of course, this is the one that I didn't take in the small account, which would have been the one that would have been green. I just missed the entry. I was like, I entered it on my computer, and then I was like, oh, I got to enter it on my phone for the small account. I could have just switched accounts on my computer, but I just didn't do it fast enough. And then I missed the entry because I was looking at this candle at the open, this 5-minute candle, and we came down, retested the close of yesterday roughly at 1420, and then I saw us holding. Okay, like that made it pretty obvious to me where my stop loss is going to be if I enter this thing. So I entered like right in here on along like 10 minutes after the open, and then my stop loss was here. Never hit the stop loss. It just blew it up, and the thing went, to 15. I was looking for 15. I think I sold most of it somewhere up in here. But that was that. That was a nice trade, it looks like. And even went for more later on. So now it's just consolidating at VWAP, flatlining for now at VWAP. I don't know if you guys have used any of those option flow services. Check this out. I signed up for this today just to check it out and see how it goes for a month. It's like $40 for unusual whales. So what you can do is you can pretty much sort and have unusual option flow come through, and so you can sort things out and look at different strikes and different types of options and whatnot. And I'm curious to see how this works. I'm just going to be kind of looking at this, not like it matters super much, or not like it matters a ton, but especially with the CPI tomorrow, people could be hedging and whatnot. But you see a lot of it into the close here. A lot of people, a lot of Microsoft calls going through, a lot on the bid, only a couple on the ask. It tells you here's the premium, this right here, this column, the premium size, so how much it cost. This one right here, Apple puts, someone slapped Apple puts at the ask expiring next Friday for $15.5 million. And these were Apple puts for 155. So they're in the money puts. Could be a hedge. You can't take it super seriously because this could be a hedge. Someone could be, could have $700 million of Apple stock, right? And they want to hedge a CPI, and so they'll buy some in the money puts to hedge themselves. So there's a lot of reasons why these things could be going through, but I thought it was interesting and it could be notable, especially when you're looking at some of the like, I don't say risk on, but some of the more trendy stocks, if you want to call it that, the non-Apples, Amazons, like there could be something that you see in this that might be useful. And it's always the someone knows something, kind of rumors that you always get. So I'm curious to see how this works. I'm not really going to be super reliant upon this, but I'll look at it every night on a couple stocks that I've been watching and just see if I can, put any correlations to it. There's a lot more you can get into this and dive deeper into it, but I figure for $40, for a month, give it a shot and see how it goes. Because there's a lot of other services like this that are a lot more expensive from what I've seen. So I'm curious, and they have free trials. This one doesn't have a free trial, I believe. So I'm curious to see how it works or see how it goes for about a month. But keep that on the background and we'll just be, we'll be keeping an eye the next couple of weeks. Maybe we won't use it. Maybe we will. Depends if you find value in it. But for the price, I thought it was worth a shot. ELYS pump projected 200 SMA. I do on NVOS. Let's check out ELYS first, small cap wise. That thing, oh wow, that thing just went nuts. Talk about a freaking monstrous move right here, guys. We had a move from like sub 12 cents, and there was multiple days that you could have bought this thing sub 12 cents to hitting a high of like almost 80 cents yesterday. Like what the frig is that? But that's the January effect in small cap land. That's what it is. I mean, when you have this right here is the higher probability of what we can, recover on these downside moves. That move right there. And we recovered it pretty nicely. SPY is still just shy of that 395. I'm surprised we didn't get a hammer today on SPY. Like I would have thought that we would see it at some point today. All of a sudden the hammer drops and SPY drops like, $3, after kind of it's slowly grinding higher. We've seen these days a lot, but it hasn't. So I'm surprised by the strength. NVOS, I think, is a similar idea. It's still top on my watch list and top on my small cap list. I'm very, very interested in NVOS. Maybe it's a tomorrow or a Friday ad. I said that last week, and if I had bought it last Friday, like I said last week, would have had a potential 100+% move come Monday. I didn't do it, but it's providing another opportunity, and it looks very similar to GREE. If I'm not mistaken, it looks very similar to this stock. No, not really. It was QTQT, but they got delisted. So I'm kind of curious about maybe there's something more going on, but it does also have the look like ELYS. NVOS, right, has a couple little weird pop days, high volume comes in, starts to sell right back off, go back to lows very quickly. It's done that a couple times. ELYS, I typed it in wrong. ELYS did something very similar, right? Had this big pop, over 100%, came back down, went to new lows, then popped again, and then went on that huge 600% rally now. So it's looking similar. So again, if we flush to a new low, the risk reward starts to get interesting on NVOS if that volume stays high. So I think that's my favorite pick, I would say, out of what I've seen in the small caps I've been watching. But we'll have to keep a close eye on that one because I think that's going to be worth a shot, to say the least. Those floatings are crazy. People slapping millions of. Oh, I mean, I'm not even looking at the SPYs. I mean, you can look at those and it's even nuttier, right? If you go in here, and I go and show ETFs, look at this QQQ slappers, like calls, puts. The problem is that you've got, look at like some of these big orders, man. Apple puts 6.8 million slapped at the ask. Someone bid 4.5 million. I mean, it's crazy, but the problem with this is that when you have a day like CPI tomorrow, a lot of this stuff could be hedges. And so like, you got to be able to discern that. And there's ways to get a feel, but it's still tough. It's not always as easy as you think. So I keep that SPY turned on. I can go check on SPY if I wanted to, but you can dive deeper into some of these things too. Let's just check out Apple and see what the flow looks like. Kind of cool charts. There's a lot. It's kind of crazy to look at. We also know that the midday on Wednesday's a Wednesday. In terms of that put call ratio, which I believe probably spiked today, the midday Wednesdays like that is that time that you want to be careful because midday Wednesday is when a lot of those options will end up going through, where you're going to have tons of in-the-money puts or calls being bought, or in-the-money puts being slapped, and it's not necessarily for the reason that you may think. And so it doesn't really matter in terms of the put-call ratios and stuff. We had a video on why, the whole reasoning why, but it's been almost, I don't want to say unusable put-call ratio, but Wednesday is the day that we usually see a spike. Let's just double-check and see if we got a spike on the put-call ratio today. No, not really. No, actually, no, it did. It did spike off of where it was. It was pretty bullish and then or swayed towards more towards calls, and then it really pushed up towards puts late. So, yeah, you got a decent little push. Yeah, SPY trying to pull back a little bit. Tesla's going for it. At least he's trying to. Funny how that works, right? Looks bearish. Could just flush off. Nope. Catches a bid. Snaps right back up. Bebop. Boom. Can't make it up sometimes. And that's another one that I had on Tesla. I actually kind of take it off for break even now. But I had it here. I had puts here. I could have sold some, but they didn't move that much. I bought next week expiration, which is probably why. But I just took it off for break even now as it's pushing up. Essentially a dud. Another day, another red P&O. Look at. So it's been the past like 2-3 weeks. I feel like I've had like minimal. The green days have been the first day of the week, and then it's like the rest of the week I just have no feel. But they've been somewhat smaller. Not somewhat. They've been smaller, for sure. So hasn't been terrible. Also, the small caps have helped, and the strangles have been green. I ended up cutting off that natural gas trade. Just cut me off, and well, not cut me off. It just fell below the level I was looking for it to hold. Yesterday, it was yesterday, and for good reason. It actually went lower today. It's bouncing back now, but it fell below that 350. Stopped out. Is what it is. It's still just super weak. I'm surprised it's been this week without any bounce, but originally I wanted it short anyway, so sometimes you just got to let it go. D-nut swing long, starting to put in some work. D-nut. Yeah, look at that. Yeah, it's come up into resistance. Now you want to see it build above here and start to inch up. Doesn't look too shabby. Tomorrow could be an insane day. Now that we look at it, like you look across the board. Let's just double check some of these charts. Apple. Well, you look at the, if you look over at small cap land or mid cap land, there's some big moves in some of the risk on names. And let's just say market likes the CPI that we get tomorrow. Yeah, we're probably going to rip. These things are probably going to gap. They're probably going to gap up if the market likes CPI. It's going to gap up a lot. So I would be very careful because these gap ups can be unwound fast, but could be good. Could be a good day for upside. If not, I mean, there's a couple names out there, especially like an Amazon, for example, that's popping up 5.5% today off of those lows. It's up about $15 almost now off of the lows that it made back on just literally last Friday. Talk about an unwind there. That could be one that just completely unravels tomorrow if we get a bad CPI, and it could just be, Amazon back down sub $90. So there could be some good moves there too. TLT inching, yeah, it looks pretty strong to me. That will move tomorrow, most likely based off CPI as well. But that's been inching up. XBI, it looks pretty prime for a move. It's trying. It's up here towards that 80. It's over 84 right now. I mean, over 84, 85, man, gets in. This is going to be, whether it's up or down, I would want to be paying close attention to LABU and LABD. LABU and LABD are the 3X ETFs. But XBI will also work as well in terms of the upside or downside off of these contracts, I'm sure. But this could be one even as well for a strangle. Actually, I might even take a peek at it because this is coiled up for how friggin' long now? This thing has been coiled up. So Let's just actually, let me just take a look now and just jump over to Webull and check it out. Because I'm interested in myself on a little XBI possible strangle. If it even makes any sense, though. Because it might not. It might not make any sense, and it might be too expensive or whatever. So if you go out to, you could go out to next week. Let's go out to next Friday. Expecting a move on XBI. If you went out to next Friday, we can enter this into, let's go and look at, I've been doing strangles. We can do straddles too. It doesn't really matter. You can do either one. Let's go with the straddle look on XBI for next week. And let's say we wanted to go for the 85s. 85, we're right around, well, 84 or 50 could be a little more reasonable, or even 84 could be even a more reasonable spot. Let's check this out. So I'm going to go to the order entry. I'm going to go to, why is it being weird? I want to pull this guy up. Oh, I got to open this up in the order entry. Sorry. Go to the graph. Go to the graph of the order entry. Okay, here we go. So if we were to do now 10 contracts, let's just go one contract for the simplicity factor here. And we're going to play January 20th expirations on XBI, and we're going to do a straddle at the 84 strike. Essentially, we're going to be buying a 84 put and buying an 84 call. If we were to do that, we would need XBI to go over 88 or under 80, roughly speaking, for us to make any money. That's a pretty big move, man. That's like a $4 move in either direction. It seems like a lot. So these are pretty expensive from what it looks like to me. And it could easily do it, right? It could easily do it by next week, but I don't know. That's 88s up here and then 80s here. If we were to finish, let's say, a strong couple of days up at 88, 90, like, okay, like I would be like, oh, it makes sense. Like, you know, if we liked this CPI, or if we were to finish, you know, under 80, yeah, I think we could get there. We could totally do it. It just seems a little expense to me. So let's say you had a target of $90 on this. You'll make $200, you know, which is not bad, nothing to sneeze at, especially if you're risking 400 because the contracts go for about $4. You're going to risk 400. Obviously, if you finish in between, you're going to lose pretty bad, but you can still exit it for some value. So you shouldn't lose the entirety. If you held it to the expiration and we finished in between, like, yeah, we finished at 84, yeah, you can lose everything. But the chance of finishing at 84, somewhat minimal. So realistically, what's your risk here? You're probably going to risk maybe $200, $300 max, realistically, in terms of this, to make what would be, if you hit $90, about 200, and then 78 could be a target of me. I think if we go downside could be even more, down towards 75. It could even be closer to there, which could be a lot bigger. So it could actually be a good trade. And the probability here is it's a much higher probability than just betting on a directional move, because of course, directional move, if you're wrong, you're going to zero fast. So it could make sense. Let's see if we can go, if we looked over at the, let's go for a strangle and see what that would look like. The 84-85 strangle could be an interesting one. Let's check out this. Let's go to the order entry on this guy. Okay, so we lose everything if we finish between 84 and 85. Let's go to one contract again, just for simplicity standpoint. It's going to cost $3.60 if you wanted to do this. But again, same deal. We need XBI essentially sub $80 to make some change, and we need XBI above. It's not as bad. This one's a little bit better, I think, in my opinion. I would rather do this. XBI over 89, we're in the green. Over 90, we're really in the green. And then under 80, 40, we're in the green. And then under 80, we're really under 79, we're really in the green. So this one, I would probably say that's probably a better idea if I had to pick a side on this for XBI. Could even do like a 83.50 to 84.50. Could do something like that. Maybe worthwhile. So I'm just thinking out loud because XBI has been coiled up. The problem is that if if this data doesn't really, we'll see, but if this doesn't necessarily move us that much, we've been through a couple CPIs now, right, on XBI and biotechs where we haven't really, we've moved, but we haven't really broken this range. Now, of course, you could still be in this range. Like if you get a big enough move tomorrow, you could be up enough on that straddle or strangle that you might want to just take it off, right? If we get a big enough move down towards the trend line or up towards 86 to 88, so it may be enough to take it off, but I don't know. A little skeptical, I would say myself. There's Tesla tried to push up towards that. Of course, I took it out break even, but push up towards 123, rejected 123, came back down 122 now, hanging around. Though, thoughts on SoFi? SoFi Stadium, man. I've seen all that stuff about SoFi Stadium, and like it just doesn't make any sense. Like, yes, you're in LA, and yes, you have an indoor stadium to some degree where it's like an indoor-outdoor feel, but you couldn't make it so that rain couldn't get in. I just don't understand, because it still will rain sometimes. It just makes whatever. That's besides the SoFi stock. It's curling up, looks decent. If it holds over 475, that's like my zone. That was our prior support back here a couple times earlier in 2022, and also resistance here late 2022 and so far early 2023. So 480 roughly is the spot. 475 like last ditch, but 480 is the spot. Eating popcorn on the lunch break. I love it. XBI, I just hate the spreads. Yeah, that's the other problem. If you go back to the XBI contracts, you just go back to the XBIs. If I was to just go ahead with a single option contract and play those, the spreads aren't terrible, actually. 84 for next week, next Friday expiration. You can probably bid and get like around 90 cents or 190. No, they're not that bad. These aren't that bad, but that is the monthly expiration. If you play XBI weeklies, those weeklies, for example, tomorrow expiration, the spreads can be a bit bigger at times. So you got to be careful on some of these spreads. But I like the idea, to be honest. What you could also do is you could play Labu as well. Let's check it out. See what I would imagine that these spreads are going to be big as well, and not much volume on these options. So the 3X, no, not as bad actually. Look at these; these are tight. Labu right now, tights. We got some tight spreads, dude. That's for this Friday. Check out next Friday. Yeah, it's still pretty decent. You could buy a 750 call or a 750 put. Let's go with like a 7. You can buy a $7 put on Labu right now. For 38 cents, roughly. And then you could buy a 750 call for 41 cents, for 42 cents. You get a big move, boom. These will pay. That strangle will pay. Kind of like that idea. Because there's a little bit of decay factor as well, not to mention if this thing gets going for a couple of days in a row or heads down for a couple of days in a row, it kind of compounds that downside or upside effect with a 3x ETF. So that could be even a better option for you. So if we look at Labu's price, let's just say that we were looking at the $7 and the 750 strikes, right? Let's just take a look. You come to the bottom of this range, you're at $6, right? If CPI is bad. Towards the top of this range, you're up towards 8 if CPI is good. So you're going to be at around 8 or 6. The downside will pay more for sure on that. But if you do the math and we're at 6, it's worth $1. You paid less than $1. It's now worth $1. So yeah, this one makes sense. I think this one makes a lot more sense. Yeah, I might even do that because it makes a lot more sense to play this. And this is still for next Friday in terms of a strangle. But this one makes a lot more sense, I think. So I'm going to actually take a shot at it. We'll play it small, but let's go ahead and run it up. I'm going to do it in this entry form here. I like the effect of the 3x ETF and those options. That if they were like a 5-cent spread on those things, no. But the spreads are 1 cent, so they're actually essentially perfect for next week on those Labus. So I'm going to take that as well. Yeah, I know we're kind of trying these, and these are swings, but these are not really like high risk swings. Because of course, if we end up just flatlining, that's our worst case scenario. We lose it all. We could, in theory, lose it all. But after a CPI event, most likely we're going to move in one direction. Now, the biggest thing will be we move in one direction and then we give it back and we go the other way. And it takes enough time to go the other way that we end up not taking profits on the leg of the trade that's green or that's up over 100%, let's say. And then we end up letting it sit back, fall back to right in between our two strikes. And that's how you get burnt. So you got to be proactive on it. But I think it makes a lot more sense than just betting directionally going into CPI, which is a literal gamble. This is like a calculated gamble or a calculated bet. This, where a directional bet is like you're either right or wrong and you're a hero or zero. You know what I mean? This one you could still make it out even if we don't necessarily have a humongous move up or down, or we get a move in the way that you didn't think was going to happen, but you played both sides anyway and you still took advantage. So let's just take a look. So I'm going to pull up Labu there. I'll pull up the option chain here. I'm going to get myself out of the way so you can see at least what I am looking at. I know it's small, but I'm going to go to January 20th. That's just like the Weeble layout, which kind of sucks. I'm going to slap the ask. I know it's not the best idea, but I'm going to get filled by doing that. And then I could put it's got 15 minutes to go. The spreads are 1 cent, so it's not a big deal in my opinion. If we did this, let me just do the math in my head. We want to go with, I'll do about $500. That's been like the rough size. That's been like a standard size I've been doing with this stuff. So let's do like 38 cents per contract times that by 5, 190. So we could probably go 6 contracts, 6 times $38 a contract, 228. 228 plus, we're going to have to do 42 cents a contract times 6. Yeah, we could probably do 7 contracts if we realize. Let's just do 6, and I'll bid for a 7th in case they inch down to the close. So I'm going to go with the $7 puts because Labu is currently trading on the left-hand side for $7.28. So it's like perfect. So we're looking at the 7, like we're right in between these two strikes. The $7 puts are a little bit cheaper, and the $7.50 calls are a bit more expensive by like a couple cents. But I'm going to go with 6 contracts for right now. This will get us like just shy of a $500 position. And I'm just going to slap the ask. I know it's not the best, but in this situation with a 1 cent spread, it's not going to be the end of the world. 6 contracts. Why are we purchasing this? Unsettled funds. Oh, really? I got to do it on the Robinhood account? I guess I traded too much on this one. That's a big... I'll pull up on the Robinhood. Same idea, though. Doesn't really matter. I got a strangle in here. Oh, these are actually up a little bit, too. I have funds to play with here. Okay, same idea, though. And it'd probably be easier to visualize. And we can even do it in the option layout, too. So we have about $600 to play with if we wanted to. I'm probably not going to go with all of that. Let's go to the option builder. Let's just be careful on this, though. Make sure we don't get screwed on the spreads. I'm going to go long strangle on Labu, and we want a 50-cent width, and I'm looking for the 7 by 750. So here, these guys, and we're going to go out to next week, not this week. 7 to 750. These are going for 79 cents, so roughly 80, just under 80 cents. Yep, those are the same prices I was looking at before. Let me see if I can zoom in. Same prices I was looking at before, 38 cents by 42 on these puts and calls. So we're playing both ways. We need a move of Labu to go to essentially $6. Or it needs to go to 8 plus, which is a big move. Don't get me wrong, but that's by the expiration. If we get a big move tomorrow, this could be paying us already, depending upon which ones are up and down. So let's do this, and let's go with, can we do 6? Is that too much? Yeah, we can do 6. We can do 6. These guys, let's do that. 79 cents, let's take it. Pending, placed, filled. Come on. This has got to fill. I don't want to up the, I guess I could up the order by like a cent if I wanted to. But XPI has earnings. NVOS has earnings next week. Okay, that's good to know. I don't know if they haven't been up to date on their financial statements, which is a little concerning. I'll tell you that. Gonna dump my straddle right after the open. Yeah, I would think unless the move isn't huge, but I would think that's a good idea. Or you can dump one leg in theory, right? Because let's just say that I was just going through this in my head too. If let's just say that your theory was we're gonna get a move or whatever, and you do a strangle or something like that, and then you get one of your options is up 150% at the open. Let's say you buy a Labu call and put, or let's say you buy SPY. It doesn't matter. Same idea. If one of your options is up 150% at the open, the other one's going to be worth pretty much nothing, but it's still going to have some value. So what you could do is you could sell the leg that's up 150%. You've now completely covered your cost basis and you've locked gains on the trade. And if we happen to go with a fake out and we get a reversal back in the coming days and like the next week, then you can cash in and squeak a few extra bucks out of the other leg, or you could just lock it all in and take the extra gains, because in theory, if we continue or held in the direction that it went, the leg that is worth essentially nothing will go to zero. So, it depends on how you want to play it. But for the sake of getting this in, I need to up my order by, they're going for a little more. Yeah, I'm just going to do 5, and then we'll play this with the 79 or the 80 cent entry. Let's do that. Can we fill it? Please, man, you gotta be kidding me. The sell the winning leg, hold the losing leg. Yeah, that's what I mean. That's what I think is an idea. I would say if you're playing with I don't want to say house money, but if you're barely up, if the winning leg is up 110%, maybe not. But if you immediately are up on one of the legs 100 to 200%, let's say you're a 150 in the middle, you've guaranteed a winning trade. Lock it in, and then you can have the rest to ride, or leave the losing leg to ride in case it comes back. Worst case scenario, it doesn't come back, and it goes to zero. Or let's say in a couple of days, or let's say next week, you realize, okay, we're not reversing. I'm going to sell these for 2 cents and at least salvage a couple cents on the contracts. So we are just sitting here. I'm going to wait. Hopefully that fills. Hopefully it does. But I didn't realize I had sold I had sold some of the funds in the cash account didn't settle today after I sold the swing of the shares, because the shares take 2 days to settle versus options to settle the next day on Webull, which is why I had essentially no settled. I only have $100 to settle funds in there. Whatever. But if I have to adjust this order into the close, I will. Labu is inching up a bit into the close, which is why, it's at 732 now. So it's why this is kind of moving a little bit against us. Not against us, but it's kind of moving. Let's go back here and try this again. Continue, total cost. I'm going to do 5 of these guys. I'm splitting the difference between the bid and the deposit funds, dude. What? I have the funds. Maybe I didn't cancel the order. I'm like, what is going on in this thing? Okay, let me go back in here. Just make sure that everything is set. Yeah, we got $1,000 of buying power. We can do this. Sometimes Robinhood takes a second after you cancel an order to come back and go, oh yeah, you're good. Cancel this. Yeah, these should be good. Canceled 4 minutes ago. Yeah, we should be good. We should. Of course, now I got 8 minutes to get this in. Two of these canceled. Sell. That was back in November. What is going on with this thing? I'll come back to this and try this again. I guess I could do a small one on the other account and then do 2 of them, and they'll equate to $500, I guess, if it's giving me problems. But yeah, Robinhood's a pain sometimes when it does that. Here's back on the account. Oh yeah, it's got pending orders. That's why. Oh, that's why. I gotta get rid of this. Cancel that. It's throwing off the buying power. this one is still in process. So let's see if I cancel that. Let's cancel both of those. And now let's redo it. Yeah, there's the buying power. I'm like, I'm pretty sure I got buying power for this stuff. Didn't realize. Outside of that, though, we have some covered calls. Soxel, I sold that. I have a strangle here on the Qs. Same idea. And then I sold some other covered calls this week. Tried to sell some TSLLs, but they didn't go. They didn't take, or they haven't filled. Tesla would have to rip into the close for those to hit. I got a little, not aggressive, but I put a decent limit order on it. Let's try this for the third time. This is why, I mean, to be honest, Robinhood, cool, like it looks nice, but I'm not a huge fan from like, if you're like from an active perspective, it sucks. It sucks sometimes. Okay, so these are 37 cents. The puts are 37. The calls are 44. Let's do 6 of these bad boys. 80 cents. I don't know, man. Hopefully that fills. I will give it another minute or two. We'll come back to this page in like 2 minutes, 3 minutes. And then if it doesn't fill, we'll have to replace order and bid a little bit higher. So, yeah, but look at Blabu. It's closing strong. That's why. So, she's moving a little bit. Man, I'm surprised that SPY didn't give us any of those gut checks today. We're at 395 on SPY. I was almost, I don't want to say certain, because you're never certain, but I was almost certain that we'd see a SPY, hard pullback, sub VWAP, midday, late day after it was kind of just inching up. Just let me buy. Yeah, it's a pain in the ass. There is a pain in the ass. No. Yeah, but SPY squeezing out. So we're getting a little bit of a pre-CPI squeeze, which is concerning. Although somebody always knows something, right? Okay, we're going to have to replace this crap because she's pushing us. Let's go bid 81 cents. That's the freaking ask, man. I'm slapping the ask. Okay, now we should be in on these. Man, maybe we have a strategy. There we go. Oh, partially filled, now we're filled. Maybe we got something going on here. We'll see how this all works out, but maybe we got something working on this. Just bought the TQ straddle. Locked and loaded. I think that's it's going to be fun. And now we're, of course, at risk of not margin. I guess a margin call, but I'm going to sell this shit tomorrow anyway. I added 2 things today, so I could get rid of all that stuff tomorrow, ideally, and then have plenty of buying power and not be at risk. I went in a little bit on margin on it, but it's fine. I got Robinhood Gold, right? Robinhood Gold, by the way, pays on excess cash. It pays like 4% or almost 4% interest, I think, or maybe 4.5% interest, versus a regular Robinhood account pays like 1.5% interest, which is kind of nice. And on top of that, your margin rates are a lot lower, and you get $1,000 of margin for free. So I'm not paying any interest on $1,000 of margin. So it's like, I don't give a shit about my going into margin for like a short, week span, if even that, or going deeper into it. The market, it's not a big deal. You could be more meticulous with how you enter some of these things, but yeah. So here's the current one. Here's the TQs, the TQQ strangle. I have a $20 and $18. It's currently, I paid 78 cents, so we're currently up 10%. I've been finding the sweet spot is in this 25 to 50%. From what I have been seeing, short experience with doing this for more consistently, but I've been finding the sweet spot on these strangles has been that 25 to 50%. Once you're in that, you can be happy with locking gains and moving on and not having to worry. Or feeling like, I missed out from what I have seen. So I could just take this off for a $55 trade today because we're squeezing out into the close right now if I wanted to. But I'm going to, again, the whole point of this is for the CPI. So they're going to have one of these premiums are going to get crushed and one ideally goes crazy tomorrow on this. Same as XBI. And at some point, again, the XBI situation, right, with the Labu, which is why we played that. But the XBI situation is that not the risk, but obviously we could still be in this consolidation. Like we totally could stay in this consolidation by the end of the next week. Sure. However, if/when it does break out up or down, this move based off this consolidation should be pretty solid. It should be pretty big. I mean, we're talking like it's going to go 90 plus in a couple of days, or it's going to go 75 lower in a couple of days. Like most likely on this XBI, dare we say this thing goes to $100. If the market was like squeezes on, rip it up, let's go, and we had a 2-week span of just like grain across the board, XBI could be at $100 like that. So obviously, if we went to new lows in the S&P and rates just 10 years skyrockets and CPI comes in super hot, it's like holy shit, we're screwed. This could be at $70, maybe lower, for all we know. But so we get a couple things, and now we wait. We'll be waiting for tomorrow, and we shall see where things play out. We'll do a look tomorrow for those who are curious. We'll do a look into the intrinsic value of options and the deltas and stuff. So like once we kind of have a feel for where we're going to be roughly opening up, if those moves hold, we can kind of get a feel for what these options should be worth. Obviously, buying next week expiration for the strangles saves my ass in terms of if we don't move that much today or tomorrow. Tomorrow or Friday. You still have an entire week in theory that we're gonna move. And in a perfect world, right? Well, since we bought multiple, we bought like 5, we could sell 3 or 4, right? If we get a big move, we're up. If the strangle's up 100 or it's up 25 to 50% tomorrow, right? We can lock in the gains on 3 to 4 of the contracts and then hold 1 or 2. If we continue to get continuation to whatever side, we can hold the other ones and maybe they go for, 50 to 75% or 100% by, next week, right? But we've already locked in gains, so we're not going to have a big risk of downside on it. But that's the whole plan. Got a bit of a problem. Marketers feel like it encouraging a bit more impulsive. Yes, I hear you on that. I think it's much more important, I think, for directional bets. So like for a directional move, you got to be cognizant of that because it's very easy to slap a market buy on a contract. For example, let's look at like a Tesla put for today, which by the way, Tesla finished up over 123. So it's like right at that line, like directly at that line. This over 125, man, this could go into the 130s fast, if it gets up there tomorrow, or this could be back down to 110 fast. That's kind of how Tesla's been. But yeah, like if you slap a market buy and you don't realize the spreads are, 10 cents, 20 cents, depending upon the contract. If you're playing more expensive contracts, you have to factor that in to the risk. So if I'm going to slap a market buy on a Tesla put and I'm going to slap it like somewhere in here and we're in the middle of a consolidation range and my stop loss is up here and I'm looking for a bear flag for the downside, we technically got it, right? But I have to think to myself, I now got in at the ask and this thing reverses back a little bit on me. I'm immediately down 5-10% potentially on this. And I was only looking to risk, maybe 5-10% in general on the play anyway. So I don't have much leeway, right, for this thing to keep going against me. So I gotta be quick to take my stop loss. You have to just be cognizant of that. If you're not, then it can burn you a lot more. If you are willing and cognizant, and it's fine. It just has to get factored into the plan. But that is the look going into a CPI, a big CPI day tomorrow. So again, for those who are jumping in who have not seen this, we talked about it earlier, but the consensus is a 6.5% CPI tomorrow. So we'll see where it comes in at, but we are expecting a 6.5 top line. We will see where we end up. If we come in under 6.5, good chance we rally. Honestly, if we come in at 6.5, we could certainly rally too. I think that the reaction might be more into the open versus at the actual on the CPI. Like if we come in at 6.5% on the nose, we might have a big move down, a big move up that gets kind of, reversed into the open and we kind of open, dare we say, flatter. And then once we open, hopefully we have direction established within the first, hour or so, and then we get a decent sized move tomorrow. Either way, I think it's going to kind of get people thinking because there's more data inside of the CPI than just the top line number. There's the core CPI. There's also other categories, other factors. Whatever happens in this CPI is going to probably be, it's going to get people thinking at a minimum of like, hey, I want to take all my money out of the market now, or I want to get myself in the market now because, these are the stocks I like if we have a high or low CPI, And so you're going to probably have some decent market moves, you would think, tomorrow at a minimum. So we shall see. We'll do a stream tomorrow morning, 7:30 a.m. Central Time, 8:30 a.m. Eastern Time is when CPI comes out. We have a couple different strangles in place. Not expected to make, tons of money, and we're not really rooting for up or downside. I literally don't actually care. What we're rooting for tomorrow is movement, substantial movement, maybe some follow through with a continuation trend day. Like we want something like that. And hopefully, I don't want to say it's going to make things easier, but hopefully it makes for some fun over the coming weeks and months. So with that said, thanks so much for watching. Hit that thumbs up button on the way out. No one needs to know what you do to the thumbs up button, but I do appreciate you guys for hitting the thumbs up button and hanging out on the streams. We will be doing another one tomorrow morning for CPI. I have to leave shortly after that, but we'll do a live for about 30 minutes to an hour, almost 45 minutes probably, and then we do our Monday, Wednesday, Friday streams for Power Hour like usual, and then our Sunday nights like usual. So peace out. Should be a fun day tomorrow, and I'll see you guys bright and early if you want to hang out for CPI. If you can, peace.